There are massive ramifications for the stock market, what is going to happen in the financial markets over this next 6 months due to what the Federal Reserve is going to do versus what people are expecting. Investors are expecting the Federal Reserve to do. I just want to cover this quickly for you guys. I'm going to try to keep this video around 5 minutes or so. I just need to lay this out for you guys real quick. Save this maybe in your notes because this has huge ramifications for the stock market, performance, volatility, and many other things. Okay, so let's get straight into this. The Fed to start cutting rates mid-year in 2024 with a high chance of soft landing, CNBC Fed survey finds. Fed to begin cutting rates in June, according to the majority of respondents on the CNBC Fed survey. Respondents see the probability of a soft landing at 47%, up 5 points from the October survey. They lowered the probability of recession in the next year by 8 points to 41%. The 35 respondents to the survey include economists, strategists, and analysts. The Fed decides on rates that give economic outlook on Wednesday. Now, if look at this right here, okay? So this is where we're at with Fed funds rate right now, right around 5.3%. Now, at this time next year, this is what folks are expecting. They're expecting Fed funds rate to be 4.5%, which would be likely several 25 basis cut points throughout the year. Look at this here. The chief U.S. economist at Nationwide writes in, the markets have prematurely priced in high odds of rate cuts starting in Q1, but we do not expect further steady disinflation will lead the Fed to begin rate cuts around mid-year. Now, this has huge ramifications because if the Fed does start to cut rates, right, you could be looking at many other yields going down. Now, money market funds right now, there's over $6 trillion in money market funds right now. If the Federal Reserve does start cutting rates, that could lead, let's just say, $1 trillion or so of the money market funds to go over into the stock market, which would have massive ramifications for the stock market overall, right? And this is what some are maybe banking on here. Now, inflation has slowed to 3.1%, but let's be honest, 3.1% is not 2%. The Fed needs to see inflation at 2% and probably for a steady amount of time at 2%, for them to start feeling like they can start cutting rates. Jerome Powell has pretty much laid this out pretty steadily for us now, right? Federal fund futures are the most straightforward measure of determining on where traders believe the U.S. central bank's benchmark overnight interest rates will be in the future. The market has priced in about a 45% chance of a rate cut in March at the March meeting. So nearly 50% chance of the Fed cutting in March, folks, rising to about a 75% probability at the April 30th through May 1st meeting. So 75% probability of a cut in around, let's call it the end of April, beginning of May. This is extremely, extremely aggressive. Overall, the rates market sees roughly 100 basis points of cuts by the end of 2024, right? Now, you got to ask yourself, would the Federal Reserve cut rates if the economic environment is strong? Let's say the stock market's strong, the economy's strong, unemployment's low, and earnings are accelerating. Would the Federal Reserve cut rates in that sort of environment where you're having a reacceleration? And so I think, what about the companies I personally own? What about some of the stocks that I have the most money in? What are those companies saying? Are they expecting a strengthening environment for their businesses? Are they having strengthening numbers, or are they weakening? If I look at my biggest position on the public account, Meta, strengthening business model without a question. That's one of the most important companies in the world when it comes to advertising market, right? I would say they are the most important. Tesla, I would say that one is a pretty question mark, right? They have certain segments of their business that maybe could see very nice growth, obviously Cybertruck in 2024, but there's other segments of the business maybe not so much, right? Amazon, definitely expecting a great strengthening environment, e-commerce and AWS and ads. Elf, expecting very, very strong environment for them, strengthening. PayPal, strengthening. Palantir, strengthening. So if I look and I say, what about my biggest companies? They're all expecting a strengthening environment, not a weakening environment. And is the Fed going to cut into a strengthening environment? I don't know about that. And here's the bottom line. If the Federal Reserve does decide to start cutting rates, let's say in the springtime, right? Well, it's going to leave the market to say, oh boy, why are they starting to cut rates? Do they see something coming, right? Because usually if the Fed starts to cut rates, that means there's likely a recession ahead. That's why they're cutting and they're trying to get ahead of that. So that would leave the market in a very, I would say, very confused state of like, oh, Fed's starting to cut with a strengthening environment. Why are they doing that? Then if they don't cut, then people are going to say, oh boy, it's going to catch a lot of people off guard because everybody's starting to expect these rate cuts coming in even in the springtime. And if the Fed doesn't come in with those rate cuts, or let's say hypothetically, Jerome Powell comes out and says, we're not expecting to cut anytime soon, that's going to create a lot of volatility because then people are going to say, oh my gosh, are we going to be at these rates for all of 2024? Are we not getting rate cuts till 2025? That would lead to a lot of volatility in the market. And speaking of volatility, I was looking at this here today. The VIX is now a 12, folks, a 12. Volatility in the market is non-existent. However, I can tell you, we could definitely see major spikes up in VIX in the first quarter and second quarter of the year. And the reason being is we have a lot of people expecting a lot of things that might not play out. And that could catch a lot of folks very offsides and ramp up the volatility quite considerably in the front half of 2024, right? And I would gladly welcome that because that would just produce some more sales in the market, which we already have incredible deals out there in the market, but that could create a next level of deals when everybody's kind of shocked by, oh my gosh, is the Fed not going to cut? Or maybe they are going to cut, and why are they cutting? Is something going wrong here? Okay. Want to just cover this for you guys so you understand there's a lot of ramifications for the market overall. If you're looking to join my private stock group, check out the pinned comment down there. Fill out an application. We can get you in there later this week. Get access to all my courses, access to my Discord chat, all that good stuff. Okay. This is an important video. Maybe save it in your notes so you can come back to it and, kind of watch this over this next few months. Okay. Much love and have a great day.